In this video, we will delve into a 15-minute gold scalping strategy using the breakout and retest method. It's crucial to watch the video until the end, as in the conclusion, we will elucidate several factors that can enhance the profits you stand to gain by employing this 15-minute scalping trading strategy. So, don't miss out on this video to prevent any misinformation regarding the information we are about to convey. Please support our channel by liking and subscribing. Since the pair to be used in this video is the gold pair or XAU-USD on the 15-minute timeframe, let's navigate to TradingView and configure the pair and timeframe. Go to the pair settings, then set the pair to gold or XAU-USD. Afterward, adjust the timeframe to 15 minutes for the optimal setup. In addition to being applicable to scalping strategies, this trading method can also be employed in daily or swing trading strategies. Moreover, it is versatile and can work seamlessly if you are trading with other assets such as Forex, cryptocurrencies, stocks, or futures. Now, let's incorporate the indicators that will be used in this scalping strategy. Go to the Indicator Search tab and type in High and Low Optimized Trend Tracker, then select High and Low Optimized Trend Tracker from Kivanozbilgic. Next, access the settings for the High and Low Optimized Trend Tracker indicator. There are various adjustments you can make in this settings tab, but for this video, we will only change the moving average type to EMA. Click OK to confirm the changes. If the candlesticks can break out to the upside, and the candle color changes to navy blue, it indicates a bullish trend. Conversely, if the price candlestick breaks out to the downside, and the candle color changes to pink, it signals a bearish trend. Now, let's add the next indicator that will serve as a guide for placing buy and sell orders. Go back to the Indicator Search tab and type in Andean Oscillator, then select Andean Oscillator from Alexgrover. After that, access the Andean Oscillator indicator settings. Keep the input settings at their default, then go to the Style tab. In the Style tab, uncheck the box next to the signal. Once done, click OK to confirm the changes. The Andean Oscillator indicator is very user-friendly. If the bullish component crosses above the bearish component or if the bullish component is above the bearish component, it signals a buy entry, and you should be prepared to place a buy order. On the other hand, if the bearish component crosses above the bullish component or if the bearish component is above the bullish component, it signals a sell entry, and you should be prepared to place a sell order. The method for using this 15-minute gold scalping strategy is straightforward, and you just need to follow these steps. How to place a buy order. 1. When the Andean Oscillator signals a buy entry, pay attention to the price candlestick. 2. Ensure that the price candlestick has broken out to the upside, meaning the candlestick color has changed to navy blue. 3. If all conditions are met, you can place a buy order after the candlestick is closed. 4. Set the stop loss at the latest swing low. 5. Use a target take profit with a risk and reward ratio of 1 to 1.5. How to place a sell order. 1. When the Andean Oscillator signals a sell entry, pay attention to the price candlestick. 2. Ensure that the price candlestick has broken out to the downside, meaning the candlestick color has changed to pink. 3. If all conditions are met, you can place a sell order after the candlestick is closed. 4. Set the stop loss at the latest swing high. 5. Use a target take profit with a risk and reward ratio of 1 to 1.5. There are several things to note when using this 15-minute gold scalping strategy, including 1. If the Andean Oscillator gives a buy or sell signal, and the price candlestick is still within the high and low optimized trend tracker range, meaning the candlestick color is still red or green, disregard the signals that appear. 2. If you have already placed a buy or sell order and the distance between the bullish component or bearish component widens significantly, you may consider holding the position to maximize profits. However, to avoid quick reversals, you can move the stop loss following the high and low optimized trend tracker line. Just like in this example, this is a buy position. When the buy order is placed, and the distance between the bullish component and bearish component widens significantly, we can then place a trailing stop loss following the low trend tracker line. This position will last until the price candlestick touches the low trend tracker line, at which point the entry will automatically close. However, it's essential to note that this is an extension strategy to enhance profits, and the results may not necessarily align with your expectations. Always maintain prudent money management and trading psychology. That concludes this video, and see you in the next one.